Natural gas is jumping off the fresh four-year low that got printed on Thursday at $2.04. The jump in natural gas comes after the U.S. okayed plans for military strikes in both Iraq and Syria. Meanwhile, a ceasefire between Israel and Hamas did not go through after Hamas backtracked on earlier commitments it agreed on the terms. Meteorologists expect warmer temperatures to persist in the lower 48 states until mid-February, which may keep heating demand subdued. However, a slight cooldown after February 14 could stimulate a marginal increase in demand. Forecasts anticipate U.S. gas demand, including exports, to rise modestly from 127 to 128 billion cubic feet per day in the coming week. A significant element is the diminished gas flows to major U.S. LNG export facilities, averaging 13.9 billion cubic feet per day in January, down from December's 14.7 billion. The ongoing outage at Freeport LNG's Texas facility significantly contributes to this decline, resulting in more domestically available gas. Analysts indicate that U.S. LNG feed gas may not return to record levels until Freeport LNG fully resumes operations, expected in mid to late February. The total number of active drilling rigs for oil and gas in the United States decreased this week, as per the new data published by Baker Hughes on Friday. The total rig count dropped by 2 to 619 this week, compared to 759 rigs during the same period last year. The number of oil rigs remained unchanged this week after a 2-rig increase last week, maintaining at 499, which is 100 fewer than this time last year. Additionally, the number of gas rigs declined by 2 this week to 117, reflecting a loss of 41 active gas rigs compared to the same period last year. Considering the current supply-demand dynamics and the warmer weather outlook, the short-term forecast for U.S. nat gas futures leans bearish. Meanwhile, the absence of a weekend ceasefire or a ceasefire agreement poses a risk that could trigger a jump in both oil and gas prices next week due to heightened uncertainty. From a daily technical perspective, nat gas is trying to stabilize after the recent volatility. Anticipated as robust support, the $2 level below may serve as a significant foundation, potentially marking the commencement of an upward trend. Looking ahead, nat gas encounters key technical milestones for recovery. Firstly, it must reclaim the January low at $2.10. Next is the intermediary level near $2.27. Once that area gets hit, expect to see a test near the $2.45 line. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.